Alright everyone, welcome back to the channel. If you're new to the channel, warm welcome. In today's episode, we're going to be updating the series I run on my channel, Bitcoin Accounting for the Money Supply. Within this series, we divide the BTC USD price by the M2. Now, if you're a seasoned veteran to my channel, you already know why we do this, but if you are new to the channel, you might have two questions. Number one, what is the M2 money supply? And number two, why would we divide BTC USD by the M2 money supply? I'm going to answer those questions and we're going to jump into today's video. Number one, the M2 money supply, in macroeconomics also known as the money stock, is a measure of the money supply including cash deposits, checking deposits, and easily convertible near money. What is another way of saying that in layman's terms? It's simply the supply of the money within the US economy. So for example, you can see down here, we're over on the Fred chart, and this is a chart of the M2 money supply. So on the y-axis here, you can see billions of dollars, and on the x-axis, we have periods of time. So for example, if we come back to 1960, you can see that in January of 1960, we are running into a valuation of approximately 298 billion. What's interesting is we come all the way up, you can see we're in a parabolic rally, and at this moment in time, in April of 2022 was when this was last updated, the M2 money supply is currently sitting at a supply level of 21,728 billion. Which obviously represents a massive increase in the supply of US dollars within the economy. Number two, so we've answered what the M2 money supply is. Number two, why would we divide Bitcoin by the M2 money supply? Well, it's for one very simple reason. In the past couple of years, the US, as you can see over here, we've basically been printing money like there's absolutely no tomorrow. Because of that money printing and fiscal stimulus, a lot of that money has found its way into the crypto market. So what is very interesting is when you divide the Bitcoin price by the M2 money supply, another way of saying this is when we account for inflation within the Bitcoin USD chart, what you'll notice is this chart here, which is Bitcoin divided by the M2, looks a lot different to the BTC USD chart. And there's a very simple reason for that. Like I said, if we look at where we're currently sitting at, we're currently sitting at a valuation 52.5% higher than the previous all-time high in December 2017. And this can largely be attributed to the increase in the M2 money supply. How do we know this? Because when we come over to BTC USD divided by the M2, what you'll notice is we are no longer 52% above the previous all-time high. What we actually are is let's find the approximate value. This is slightly hard to get the approximate value on these macro charts, but approximately 2.5% below the previous all-time high, which represents about a 55% decrease against the simple BTC USD chart. Now, like I said, at this moment in time, 55% of the increase that we've seen over the past 5 years can be solely attributed to the M2 money supply. And we verified this by measuring the difference, quantifying the percent differences between the BTC USD chart and the BTC USD divided by the M2. So why is this so important to look at? Well, it gives us a more accurate description or a more accurate picture of how Bitcoin's growth has actually been. Because, for example, you can imagine if you lived in Zimbabwe or somewhere where there's hyperinflation all the time, the prices of commodities, assets, all of that stuff is constantly going up because, you know, the value of your money is constantly going down. So obviously the price, not necessarily the value, but the price of other asset classes and commodities are largely increasing against the dollar or whatever currency you're using, whether it's the Zimbabwean dollar or whatever currency you'd be using, which is in a hyperinflationary event. So what's interesting to note, like I said, is at this moment in time, Bitcoin in the past couple of days has actually started to once again capitulate below the previous all-time high. Now, I don't want to do a bunch of TA on this, but you know, we are currently sitting in a pretty nasty bear flag, and it is the exact same over on the BTC USD chart. These charts, they basically do look the same. I mean, if we zoom out, weekly time frame, zoom all the way out, you actually really won't be able to notice a difference between the BTC USD chart and the BTC USD chart divided by the M2 up until about this range over here. So for example, if we take this out and if we take this out and simply look at what's been going on here, you can see these cycles that we've been having in the BTC price, they look exactly the same, no matter what chart you look at it on. But when we come over to what we're seeing right now, you can see because of the hyperinflation that the US is currently witnessing, if 55% of an increase in asset classes over the US dollar is not a hyperinflationary event, then I would like to know what hyperinflation is. But as you can see, these two charts are completely different and they're very much diverging from each other in the past 2 years. So I did just want to give you a quick update on this, letting you know that we are once again capitulating below the previous all-time high when accounting for the money supply. Now, I much prefer to quantify Bitcoin against the M2 because, like I said, it gives you a much more accurate picture of what the growth has actually been like and how the asset classes are actually performing. I mean, if the US goes out and decides to print, you know, at this moment in time, what are we sitting at? We're sitting at around about 21.7 trillion. If the US tomorrow decides to print 100 trillion, you would obviously see asset classes, Bitcoin, gold, the price of food, commodities, everything would start soaring on the USD chart, but the M2 chart would stay the same. So it's interesting to note when we do quantify Bitcoin against the M2, at this moment in time, we have not seen any growth for approximately 236 weeks or 1,652 days. Now, there's really only one other thing that I do want to talk about, and it's I do think that we are coming down to the 200-week moving average. Now, this is where it gets sticky because we've had such a divergence between these two charts. This is something that we've not seen before, so at this moment in time, it becomes hard to predict. Are we going to be moving down to the 200-week moving average on the BTC USD chart, which will currently be sitting at around 23,000 by the time we do come down there? Or are we going to be moving down to approximately 1.17 on this index chart? Now, it is important to note that when we do quantify Bitcoin against the M2, we can't quantify this on a price chart. We're dividing it by the M2, and subsequently we are looking at this on a index chart. For example, I believe one, as in, you know, this was when the index was set, was in December 2017. But in my opinion, we are coming down to one of these 200-week moving average. The question is, which one are we moving down to? At this moment in time, if we were to move down to the 200-week moving average over on the BTC USD chart, this would represent a drop of approximately 25% down to the 200-week. However, if we do extrapolate over, it will be much of a less harsh drop on the M2 because, you know, we've already dropped below the previous all-time high. So as you can imagine, this is only about a 15.5% drop. I do kind of find it hard to believe that we would be breaking massively below the M2. However, it is, or below the 200-week rather, but it is important to note that we have done this on a very, very small handful of occasions. Specifically on BTC USD, the bottoms are a lot nicer. For example, over in the 2020 pandemic scare, you can see the candle body closes were perfectly on the 200-week. Yes, we had candle wicks, but the candle bodies on the weekly time frame perfectly bottom. Within the next week, we were perfectly out of there. Coming over to the 2018 bear market, You can see candle body close, candle body close, candle body wick, candle body wick, come back to 2000 and 2015, and once again candle body, candle body, candle body, candle body. I'm not going to keep on repeating myself, but all of these touch points here were over on the 200-day, and unfortunately we can't extrapolate it back specifically for the 200-day, but if we could, it would look something like this. Now, for example, the difference between this represents 21 weeks. So if we were to get the 200-week moving average and we were to subtract 21 weeks for that, we would have approximately 179 weeks worth of data. And interestingly, obviously disinclude the price over here because, you know, we're specifically looking at what the data was like over here. But you can see candle body closes, and, you know, yes, we did move below it a few times, but the 200-week the 200-week exactly was basically always where we've bottomed in previous market cycles. So like I said, in my opinion, we're moving down to one of these moving averages. The question is, which one are we moving down to? If we are to move down to where Bitcoin is against the M2 money supply, this would only be about a 15.5% drop, which would represent a move back down to 35,000, just wicking below it down to 35,200 from where we previously bottomed at 35,500, which would be very, very interesting. If we do come down here and do a double bottom slash expanded flat side, I believe this is called an expanded flat bottom, where we would take an extra leg down just a tiny bit, and then we would start bouncing. So like I said, I do believe we are coming down to one of these. The question is, which one are we coming down to? Let me know what you think of that down below. If you are interested in knowing how to quantify Bitcoin against different asset classes and things like the M2 money supply, go check out my educational playlist. I have made a video on how to compare Bitcoin to things that you would not normally be able to compare them to on TradingView. For example, you can compare Bitcoin to the Nasdaq, you can compare Bitcoin to Tesla, gold, the SPY, whereas normally if you were to go in and type in, you know, Bitcoin SPY, it's not there. If you were to type in Bitcoin gold, it's not there. So I've made a video about how to do that in my educational playlist. I believe it's called Quantifying Bitcoin Against Other Asset Classes. If you're interested in that, go check it out. That's all I've got for you today. Hope you enjoyed the video. As always, not financial advice. Cowboy out. Peace.